it's really interesting to understand how supply chains are going to be impacted by all of this, because we know that in many ways China is the assembly point for Apple. Some of the products in an Apple phone are actually made in Kentucky and shipped to China and then shipped back to us. But ultimately, are we in a game of chicken when it comes to US-China tit-for-tat right now?
Well, yeah, at 104% tariffs, I'd say so. And so, yeah, there are loaded assumptions on both the US and the Chinese sides over this trade war. Each side believes the other is in the weaker economic position, that the other one will fold. And Beijing at this point is basically saying, bring it, right? They're counting on US inventories to get shaved down. People checking their Amazon orders and seeing that they're not coming through, going to Walmart, seeing their shelves empty out. And so at that point, this is obviously going to force a conversation, but to what end, right? There's not much fodder for a real negotiation here. You could have some sort of a reset, maybe getting back to, let's say, 54% tariffs. But that's not much of a win here, right? After this scale of disruption, and already supply chains, as you mentioned, are going to be greatly disrupted.
We've heard time and time again that the US thinks China wants to make a deal. Do you think that ultimately it does, that we ever get to a better outcome in this scenario? Because there are companies currently locked, not knowing what to do in this scenario as to whether the tariffs are short-term or long-term.
Look, China would, of course, love a real negotiation with the US that spans into other domains as well. To say, for example, okay, if the US wants to reduce its trade deficit with China, then fine, let's talk about large-scale purchases. Let's talk about importing more NVIDIA semiconductors, for example, which would in part then blow apart the export control regime. You can see how Beijing would be angling for that. Now, would that happen? I think that's very low likelihood, because remember, we're just talking about a conflict spiral in the trade domain right now. There is a whole other layer here when it comes to the tech controls trajectory, escalation on that front. Also, how China's getting more creative with its own retaliatory toolkit, which is going to put multinationals in China, particularly tech companies, in a very difficult position in the months ahead.
So I want to stay on this point, because for the technology industry, tariffs are one tool or policy point, and the export of technology and the controls on those exports, as you point out, were the most significant prior to last week. Do you expect both to increase? In other words, will we see further specific controls by the United States on cutting-edge GPUs and other technology?
So attention span is a question, right, for the current U.S. administration. We'll have to see, as BIS under Commerce is starting to ramp up, is it going to have the latitude to patch up export controls? For example, there have been pending controls to expand chip controls to cover, for example, NVIDIA H20 chips in the wake of DeepSeek's big breakthrough. But there's more than that, right? There's a bigger conversation around how do you evolve economic security standards that effectively exclude China from AI infrastructure buildouts globally. So there's a lot more that's coming on the tech front. And meanwhile, China's looking at a number of retaliatory tools where it's singling out U.S. big tech companies as well.
Yes, Reva, how do you interpret China's responses, China's actions in this?
Yeah, so a few things, right? So when you look beyond the tit for tat on the tariffs, right? China's doing some interesting things where, for example, in it's implementing provisions for the anti-foreign sanctions law. It's talking about countermeasures that include suspending IP rights for U.S. companies in China. That's explosive, right? If China goes down that path, that's a very slippery slope. That's something that's going to spread alarm, not just to U.S. companies, right, but Japanese, European, everyone, once you start to break apart those norms. Moreover, China has its anti-monopoly arm, SAMR, that has veto power over a number of strategic M&A around the world. There are a lot of strategic deals that are supposed to be struck as a result of these trade wars. At least that's the intent of the administration. We still don't know, for example, what's going to happen with Intel and TSMC, right, as Intel has been struggling. Do you really think that the U.S. is going to recognize a Chinese veto over a major merger that is based on national security arguments? So we're already veering toward this conflict of law conundrum on that front, as well as on the IP front, which, again, is a very slippery slope for tech companies.